Hello everybody, welcome to the March 13th through 14th, Thursday and Friday price action review. So getting started, we're looking at the S&P on the left and the NASDAQ on the right on the 1 hour time frame. And as you guys know, on Wednesday, I said I wanted to see these highs get delivered, but I said if something clear-cut bearish form, then I wouldn't be surprised if price ran down one more time before delivering the run. And that is exactly what happened. So we ran down one more time before really beginning the run towards these highs right here. And I still believe that these highs are in the crosshairs and we could see that get delivered earlier on into next week. Now, the thing that was bearish that tipped its hand is for you to find out. That is your homework. So this portion of price action right here, through the lens of the 15-minute time frame, the 5-minute time frame, and the 1-minute time frame, you can look at this portion of price action right here before this run lower, and you'll see why we dropped. And once we created that drop, we formed a non-sequential weekly cycle SMT. And as you can see, once that weekly cycle sequential SMT formed, that is what caused us to return into the range, beginning the run towards the buy side liquidity. Now going from the 1 hour chart to the 6 hour time frame towards the end of the day on Thursday, as you guys can see right here, this candle in specific is a TPD. Now, even though the colors are the exact same on candle number 2, you can see there is that cracking correlation between candle 1 and candle 3. On the Dow, as you can see, candle 3 creates a lower open compared to candle 1, while on the NASDAQ and the S&P, candle 3 creates a higher open compared to candle 1's close. So this is what I mean whenever I say the color of the candle means absolutely nothing. The only thing that matters is a cracking correlation between the first candle and the third candle. And now looking a little bit deeper into that TPD just between the S&P and the NASDAQ, going from the 6 hour time frame back to the 1 hour time frame. Whenever you have 6 hour TPDs, you want to look through it through the lens of the 1 hour time frame. And as you can see here, at the second half of the TPD, we formed that change in the state of delivery right here. So this close is higher than this candle's open, and this close is higher than this candle's open, creating a valid change in the state of delivery. So this entire wick right here, that would act as the reversion level. And as you can see, comparing the S&P and the NASDAQ, where candle number 3 opens up, it opens up perfectly on that reversion level, drops down, trades a little bit into the wick, and then kicks off the run, and also forms a fair value gap, trading back inside of that, and then continuing the run again. While the S&P opens up a little bit inside that reversion level, drops down a tiny bit, still within the scope of it, and again trades higher, forming a gap, drops inside of that gap, and then trades higher again. So this is another form of a cracking correlation, but you more so use this to gauge strength and weakness, and this is why the NASDAQ was the stronger asset today, because as you can see, this opened on top of the reversion level, while the S&P opened inside of the reversion level. So now going back to the 1 hour time frame, even though this was a non-sequential SMT, we still have that 6 hour TPD and that reversion level within there being able to confirm this non-sequential SMT. But another thing to add on to that is exactly what I taught you over the weekend. Once you have an SMT and a TPD, if you really want to know if that TPD is high probability, all you have to do is look to the left side of the chart and look for a original consolidation. And in this case, whenever you have wicks or very large wicks on both sides of the range, you can use strictly the bodies, as you see right here, for that original consolidation, as well as that first phase accumulation. So you have the TPD, the SMT, and then you look for that original consolidation and that first phase accumulation, and then the TPD. If you have all of these things in alignment, this is very, very, very high probability for price reversals. And if you're struggling with targets, if you're able to get in at the reversion level, you can look to target the first phase accumulation high or low. If you're bullish, then you want to target the high. You can use that as a target, or you can use the original consolidation highest point, which is that buy side liquidity that we're targeting, as a target as well. And now going back to the 6-hour time frame, knowing what we know now with this specific TPD right here, as you guys can see, price traded higher, but right before it expanded in the morning session, I want you to take a moment and look, pause the video, and write down what you see. If you said this TPD right here, you would be correct. Now this served as a continuation TPD. As you can see, this open is lower than this close. This open is higher than this close. And this open is higher than this close. So there's a cracking correlation. And the reason why narrative is extremely important is because, as you can see, if you would have followed typical continuation TPD rules, technically it's supposed to form around here somewhere, and then you can ride that to go higher, and there was also no gap to the left of the continuation TPD. But once you have well-defined narrative established, and you already have a TPD confirming it, as you can see right here with this one, that's whenever you can use interlinked TPDs like this. And also this specific TPD is in regards to time, because candle 3 would be the entire morning session. And as you already know, the morning session is the most volatile and highest probability session to trade. And now going back to the 1 hour time frame, looking at that TPD through the lens of the lower time frame, we can see that within here, there was this change in the state of delivery, creating that reversion level. Candle 3 opens up on the NASDAQ, tags inside of that reversion level, and then continues higher, while the Dow runs this low right here, being the weakest asset, creating the run higher, creating a two-stage cracking correlation, while the S&P trades actually inside that reversion level one more time on a specific candle. Now this is where the voodoo really comes into play. If we look a little bit closer, this specific candle right here that dropped into the reversion level to the absolute tick, and I believe that it does not get much better than this. This is perfection. But what is so important about this candle is this is the 10 o'clock candle, which is whenever news released. So news released, repriced perfectly inside of this reversion level. And you're probably wondering, why did the NASDAQ not trade into the reversion level wick? Why did the S&P trade into the reversion level wick? And why did the Dow run this low right here? Remember earlier on in the video, whenever we said that the NASDAQ is the strongest, and we got that information through the opening price of candle 3 on that initial TPD, that is how you're able to see stuff like this. But hopefully you all found this one insightful. I will speak with you all in the next live stream. Good luck and enjoy your weekend.